Good morning, everybody, and welcome to MarketStream.live. We're going to take a look at what's hot on the open here in the U.S. And my name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. Let's jump right in. We have the Dow Jones right now trading down 20 points, 0.1% at 20,529. The story here, sitting on its 50-day moving average. So, okay, that's a technical perspective. The other thing that you want to take a look at that could be an indicator of what's going on, take a look at the put-call ratios. Now, right now I'm looking at the SIBO website, and I'm looking at the total put-call ratio of 1.09. That means that there's a slight edge right now to the number of puts being purchased versus calls. You see the index put-call ratio at 1.19, the exchange-traded products put-call ratio at 1.75. That's telling you that right now there are index and ETF, in other words, either sector or index ETFs, where they're buying more puts than calls. That could be just utilized as your universal hedge. The equity put-call ratio, though, in individual stocks, 0.58. That means that more calls are being purchased than puts. And the SIBO volatility index put-call ratio, 0.55. More calls being bought on the volatility side than puts. And vol is counter trends the market. Market going up, vol typically is flat or going down. If a market's going down sharply, vol tends to go up. Now, vol will move before the market typically, unless there's some sort of unforeseen event that the market just couldn't see happening. Now, with all of this being said, looking at the markets, I take all of these moves right now and these challenges with a grain of salt. What do I mean? Like I said in the Dow, this area right now, this level right here of 20,476, that's the battle line for the short-term and intermediate-term bulls. If you actually take a little bit more of a deeper look, you can see that the challenge has come in place in the last couple of weeks. And we haven't seen a challenge like this in all of 2017. As a matter of fact, we haven't seen a challenge like this since November, the election, right? That's when the market popped after the drop, after the announcement, after Trump won, boom. Trump effect, boom. So we haven't seen any type of meaningful pullback since the election. That means that there are a whole lot of people over the last 5 months that have not been able to get on this train to the upside. There was a consolidation, another lift, and now we have a consolidation and now a pullback. Let's see if we get a challenge here on the Dow. Let's watch that challenge of 20,000, right? That's where the short-term bulls that have gotten in over the last 5 weeks, basically 6 months, that's where the challenge is going to come into play. Taking a look at the S&Ps, again, haven't had a challenge in the last 5 months. It hasn't even challenged that 20-day moving average on a weekly chart. Why am I showing you this? Because I want to give you context. Yes, the short-term most recent moves in the last couple of days, they've been violent, right? We've seen volatility go from basically 11 to 15. That's a decent vol move. And it's come back off. It's now trading at 12. But the point being is that I want you to put some context here. These are the areas that if you're a bull, you're going to start watching these tests, and then this is the area where you start to look at implementing the strategies that we talk about in Strategy Now, like laddered short puts, like maybe some call spreads, diagonals, calendar spreads, especially if volatility is muted. If vol still sticks and we stay in these little consolidative ranges, then, or slight correction ranges, this is if you're already owning stocks, this is where you start to look to sell covered calls, okay? Especially if we stay in this corrective stance. Now taking a look at the NASDAQ, again from a weekly chart, you see that it's been very tight. This has been the best performing index so far in 2017. It's been holding up in spite of all the headline risks, in spite of all the volatility. You see on the weekly chart, still very strong. This is where we need some conviction. What is that conviction? It could be coming from Washington. It could be coming from earnings that are going to be starting to cycle up again in the next month and a half. It could be from global markets moving up and moving faster than U.S. markets. But this is really where the telltale is. The Russell 2000. This is that domestically centric ETF or a sector. And I talk about this index a lot because this is where you see the impact of the policy changes that are on the forefront. When healthcare didn't get passed, we had a challenge. When we're now looking at tax reform, and as you see tax reform start coming down the pipe, there's going to be a challenge. Now we're in this area where if I'm looking at any one of these indices and I'm looking to either add or build a new position, and I'm continuing to stay bullish on that particular index or that sector, this area here on the Russell 2000 is where I'm going to start looking to add positions. Basically from 1270 up to 1350. These are going to be the range that I'm going to start looking at if, in fact, we get a challenge or a pullback that's a little bit deeper than what's occurring right now. Right now, the Russell 2000 is down 460. Finally, taking a look at volatility, you see that volatility this week has been all over the map. As a matter of fact, you see that volatility, the high-low, got as high as $15, got as low as $12.10. So bottom line is that we're seeing volatility have a decent range, but it's not off the charts as far as having any notable violent concerns in the near future. And then crude oil. Yes, the dollar has firmed up. It actually has pulled off of its best levels this morning. It's trading down 7 cents. But crude oil continues to waffle down here at its lows. It's at 48.18, up 45 cents this morning. Watch the crude contract, especially now that we're going to start seeing these storage numbers come out. If, in fact, we continue to have a build both here in the United States and we continue to see that there's a build in the OPEC nations, that's going to put pressure on oil traders. Now, the other thing that you're going to want to watch as far as the crude contracts is watch the gasoline stocks. If the gasoline stockpiles continue to move, in other words, we had a draw last week on gasoline, that could be a benefit. Even though we have a storage build on crude oil, that means that gas is moving, that eventually it's going to get refined. And we're getting into that part of the spring and summer season where that refining to gas is going to start picking up. And if that demand is there, that could be really solid for crude, and that could actually start to establish some sort of floor at this juncture. All right, folks, that's it right now for On the Open here in the U.S. Join me at 1:30 Eastern Time. I'm going to be talking about some strategies that are going to be able to be utilized in this environment, whether you're going up or down. This is going to be a great strategy where you're going to be able to benefit from volatility, but also potentially increase your yield in your portfolio. So join me at 1:30 Eastern Time here at MarketStream.live. See you then.